Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Monday, March 14th. This will be a technical analysis breakdown. So if you're somebody that uses charts within your trading, or maybe you're just interested in learning more about this tool and how it can be used to help make good decisions as a trader, this will be a video for you. First off, though, before we get to the watch list, I want to personally invite you to get signed up for this free live online class that I'm offering next week. So if you're liking what you see as I go through the video and you want to learn more about this tool, how it can and should be used to build consistency as a trader, then certainly get signed up for the free class. If you're watching on YouTube, there's a link down in the description box. If you're watching at my site, there's an area right there on the webpage that you can click on. So keep that in mind. And if you're liking what you see, then like I said, definitely get signed up. A couple of quick clarification points before we get to the stocks. First off, the market is still open for a little bit of time, so that price is still going to be changing and the candlesticks will still be moving. But I like to do these videos when the market's still open for a little bit because sometimes we can capture some really interesting late day action. And then second, I'll be using the 30-minute time frame. So for a beginner, what that means is that each one of these candlesticks here, as they're called, represents 30 minutes worth of time. So stock number one, HYMC. Talked about this in yesterday's video, and wow, you can see that resistance line that I put right there. Price broke above it and then spent the first half of the day just absolutely beast moding all the way up to right around 260. But yeah, as of now, the price has pulled back, which is creating a very interesting scenario headed into Monday. And this scenario is based around a foundational rule in charting, which states when levels of resistance are broken and closed above, you want to see them act as support. So moving forward into the day, that $1.40 mark was a resistance, but because the price is now above it, this would be an area that's not guaranteed to hold as support, but it is certainly a level that's rational, that's plausible to think that if the price gets down to that area, it could very well hold as support. Or if you don't even like that, then not too far below that $1.40 mark is a purple line there, which on my chart denotes a very well-known 50-period moving average, which could provide some support. But the point here being is that there's still a lot of upwards momentum. I mean, nobody can deny the fact that there's upwards momentum, but now there's just a bit of a pullback. So the question just becomes, is this a healthy pullback? Or who knows, maybe this is the beginning of the end. But the point here is that's why risk management matters, because you want to make sure that you don't get stuck in some sort of major downwards move. But what's also nice about these pullbacks is at least the worry of being the sucker, buying the top has passed, right? So if you're someone that's, I don't know, am I the sucker? Am I suffering from FOMO, fear of missing out? Nope, you're not. Those people were already buying up around there. So the price is pulled back, which of course doesn't guarantee a winning trade, but at least you know that you're not buying the top or anything like that. Next one here, MULN, and this will mean a bit more to those that have watched past videos, but if you have, then hopefully you remember me talking about that red line right there at $1.40 as it's knocked down the price a couple of times. And then when you know it, once again, it didn't necessarily knock down the price because the price did make a move up through it and got all the way up there. Problem is, the momentum completely disappeared, and the price is now fallen back below. So point here being, $1.40 is now going to be just that much more of an important level to keep an eye on moving forward, and there's going to be that many more people watching it, which is good because when lots of people are watching the same level and wondering the same things, call it self-fulfilling prophecy, call it whatever you want, that can produce very dynamic movements. So $1.40 is by far going to be that main area of resistance. As far as supports are concerned, and more so kind of just general pattern perspectives, whoops, let's change that. You can see a very, very straightforward trend line right there. So I'll change that to green to represent more so a bullish dynamic of things. But within the bigger, depending on how you define big picture, but within the past few week point of view, have a big ascending triangle here with, again, the breakout point of that ascending triangle being there at $1.40. And sure, the price did pull back here a little bit, both in the grand scheme of things, it's still well within striking distance of $1.40. So let's see if the price can get the break of that next week. Next one, NIO, and unfortunately, the bloodshed continues, which, kind of the rub salt in the wounds is that the price started off with the gap up. So it was looking like, okay, maybe some more strength is coming, and then that opening 30 minutes, just a nasty candle, and then really never looked back from there, just a slow bleed downwards, which prompts our first key update. That's just based on another foundational rule. When levels of support are broken and closed below, they tend to act as resistance. So if there is any sort of, consolidation and then attempted move back to the upside, that first big question mark is right there at 1725 in terms of can the price actually break above it if it gets up to that area of resistance. So keep a close eye on that. And then as far as levels of support are concerned, we're going to have to go. In fact, I may need to change the time frame on this. Yeah, this is good, because it's been so long since the price has been down here. Let's change to the daily time frame. So we're leaving the 30-minute here, going, oh, wow, even on the daily, we got to squeeze things down quite a bit. Goodness, okay. So, I mean, we are talking about multiple year lows here now. So next level of support going to be right there at $15.35. So $15.35. Yeah, and that's coming from back there in September of 2020. So $15.35, next key level of support. We'll go back to the 30-minute here. But overall, the downtrend continues, and the nasty downwardsness continues. But who knows? We'll see if the price can try to, level out sometime next week. Next one, AMC, and I mean, no need to beat around the bush. Not a good day at all. And for those of you that have watched past videos, you know why I'm saying this. Not necessarily because it was right on the day, but because the price has now just obliterated this support zone, which up until today, it was doing a good job of respecting. But you can see now the price is well below both these levels. And as I speak right now, it's at lows and potentially even going to get lower than this. So let's get some things updated here. I'm going to go ahead and get rid of that line right there. And we'll leave this level up here because the price literally, so right here, good example of charts. Price came down here, broke that level of support. So at that point, the rule goes into play. That $15 you'd expect to act as resistance. So we'll change it to resistance. And then you can see the price bounce back up. And what a surprise. Surprise, surprise, right at that level, got rejected back down. So the power of charts. Are charts a perfect tool? No, nothing is perfect. But are they a tool that I believe you need to learn and understand how they work? Absolutely. So yeah, quick plug, get signed up for that free class next week. But so any sort of bounce, $15 will be that main level. And then as far as next levels of support are concerned, next key overarching level going to be right there, which sits at, basically where it's at right now, $14.25. And then after $14.25, next key level down there around $13.60. But overall, very rough way to end the week. That support zone has now been completely broken. And as you see right now, price is sitting there right around that green line. But we'll see if some sort of bounce happens next week. Next one, GFAI. And no doubt about it, this one's looking pretty ugly. But for you longer time viewers, you've heard me say it before, there can be opportunity in ugly. So that's going to be the main dynamic here is let's see if things can get a little bit more ugly and then potentially produce a better risk versus reward scenario. And in my mind, it's all about this level down here at 60 cents. Now, again, hopefully I've reiterated this enough, but I'm going to do it again. There are no guarantees. So I'm not saying that if the price comes down around the 60-cent mark, it is for sure guaranteed going to bounce back upwards. Absolutely not. But is this is this a logical place to start to put together plausible trade plans? Absolutely. So 60 cents to me makes a lot of sense. But at the same time, remember, no guarantees. So risk management matters. But I could definitely see this thing, creating a little bit more panic, breaking the spirits of a few more people. Because usually, that's when things usually bounce, right? When everybody gives up, everybody waves the white flag, and then all of a sudden it starts to show some strength. Now, am I saying that it goes to 60 and goes all the way back up there? I'm not saying that, but even if it goes a quarter of the way, half of the way, then from a risk versus reward and trade plan perspective, that could be very worthwhile. So yeah, let's see if this thing can get a bit uglier next week and maybe to go down to that 60-cent mark. Next one, DIDI. And this is on the watch list for one simple reason. It's a relatively well-known stock. I mean, it's not like a Google or a Tesla, but still a lot of people watching it. And it's down in a popular price range down below this $5 mark. And there's just some interesting late-day action going on, mainly that 30-minute session right there. Good, solid green candle. And yeah, the last 30 minutes, not a whole lot going on. But even within that, that's interesting because, had this next candle just been a big red candle that wiped away the green candle, then it's kind of like, okay, well, who really cares? But that's not what happened. So you got the big candle. That all happened on a big volume spike. And then you have a very kind of just small little candle there, which brings up the question, all right, maybe some sort of bottom is finally in. Now, not bottom in the sense of this thing goes all the way back up to its IPO price or anything like that. But from a trading perspective, maybe some sort of bottom's in that can produce some sort of worthwhile bounce. Now, let me be very clear. I'm just throwing out a question, right? That's the whole point of a watch list is you find unique situations and then you watch them. You put them on the watch list. So that's why the question is coming from. Nothing fancy other than the fact of big green candle on big volume over that 30-minute session, after obviously already getting hammered down with the gap down, and then continue to get beat down. So we'll see if that does indeed lead to anything more upwards. No guarantees, and I'm not saying to take any action now. I'm just saying this is a kind of a little unique situation, so let's watch it and see what happens next week. Next one, CEI, and I'm going to keep this one very short just because I know I've been tracking it. I know there's still lots of people out there watching it. But at this point, the chart is officially broken, at least in my opinion. And my definition of still being in play or broken was all about that green line there at $1, which you longer time viewers have heard me talk about time and time again. Now, so let me just get this updated, which you know what I'm going to say. When levels of support are broken, they tend to act as resistance. So if the chart wants to get back into play in my mind, in my opinion, quote unquote, back in play means the prices at minimum got to get back above $1. If that can happen, then okay, things start to get interesting. But as of now, it's looking like this could very well just potentially be one that drifts back into oblivion. However, there's no guarantees of that. I'm just saying that, per my definitions how I'm viewing the chart, for now, I would say that the chart is broken. It's out of play right now. But yeah, if the price can get back above $1, that would put the setup back into play. Next one, SOFI, and a brutal day today. Once more, not because it was red, but because from a technical point of view, it accomplished something not so good from the bullish side of things, and that is it broke down through these lows from way back here in late February at $8.80. And not like it broke and then kind of started to putz around. No, it broke and it's just continued to grind lower and lower and lower. So that's where the first update comes into play. I'll zoom in here more, but I just wanted you to see where this, key level was coming from. But again, as far as updates, let's get that support now changed to an area of resistance. So as I've mentioned on other stocks here on the watch list, if SOFI does try to consolidate out and then work its way back upwards, that's where the first question mark arises. Can the price actually get above $8.80, as that'll be a main point. From more of an overarching standpoint, definitely watch that purple line there, the 50 paired moving average. You can see it's starting to develop quite the reputation right now of being very stubborn. So, even if 880 is broken above, don't get me wrong, that's a good sign. But does that mean that the chart's completely fixed? Absolutely not, because you would still have to then start to focus on and see, well, can the price at least break above that purple line right there? But all in all-time new lows for SOFI. And you got to think that these stocks here that quite a few people follow at some point is going to get a worthwhile dead cat bounce, but you also got to be very careful in trying to catch falling knives. So I would want to see it at least get above 880 before I thought and got too bullish on anything. Next one, CLSD. I like this one because I think there's a couple of nice, well-defined areas here. So let's talking more so about the self-fulfilling prophecies. I think a lot of people have drawn that trend line right there, and they're going to be watching right around, let's just call it $2.10. And when again a lot of people are watching a level, who knows? Could have some good solid momentum just based on that self-fulfilling prophecy. So while nothing is guaranteed, more than valid to think that if the price can work its way up to that trend line and then get the break up through it, that break could very well create quite a bit of upwards buying pressure. So keep an eye on that. And then if you're somebody that more so enjoys playing pullbacks, then a very interesting pullback area right down there around that $1.75 mark. So keep an eye on that. But in my opinion, at least, these are definitely going to be the two main levels that most technical traders will be watching. Next one here, TSLA, Tesla. And I'm not trying to brag about myself. I'm really not. But what I am trying to do here is brag about charts because, like I said earlier, charts are not perfect, but they're definitely a useful, practical tool. And this will mean more to those of you that watched the video previously. But for those of you that did, hopefully remember me putting that red line into place right there. If you don't, hey, or if you don't believe me, I'm not offended at all. I realize I could be a total stranger to you, but that's a great thing about YouTube. Just go back into the video archive and you can see the video where I talked about this. And I put that red line into play. And again, not patting myself on the back, but just patting charts on the back. Check this out this morning. Move up, right at that red line, rejected, and then just hammered down. So once again, another quick plug. Get signed up for the free class next week. You're going to benefit from it. So right there is definitely confirmed area of resistance, but I'm going to go ahead and get rid of that as the price isn't anywhere close to it. I'm going to go ahead and get this near-term one updated, which you now know was the support. So now you would expect it to act as resistance in the near term. So if there is any sort of bounce next week, $810 will be that first key level of resistance. And that's just because out of, pure curiosity's sake, I'm going to continue to watch that overall trend line right there. But I self-admittedly right now, that trend line is completely irrelevant because the price is obviously way down below here. As far as levels of support are concerned now, key levels to watch in the very near term, going to be right there at, let's call it the 793 mark. And then after 793, next very interesting level that I think a lot of people will be watching right down there at, let's just call it the $780 mark. And I try to trade Tesla every day, traded it today, treated me nicely. So these are definitely the main levels that I will be watching. But yeah, rough day here for Tesla. So that wraps up the top 10. Again, I know I gave a couple plugs throughout the video, but seriously, if you want to get a better understanding, start to improve, build consistency as a trader, then get signed up for the free class. Like I said, it'll be next week, Thursday, March 17th at 7 p.m. Eastern time. And then as far as these top 10 videos are concerned, if you enjoy this format, if you would like for me to continue to make these videos, put in the time and effort that it does require, then please just let me know by doing two easy things. Hit the like button, leave a simple comment below. Tell me what you traded today. Tell me what you're watching next week. But hitting that like button and leaving a basic comment, really do. It goes a long way in communicating to me that you enjoy these top 10s. And as long as I know people are enjoying, I will continue to make them. So definitely get signed up for that free class next week. Everybody take care and have a good weekend.